markets reporter at Nasdaq with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Wednesday afternoon, we have Ryan McCormack, factor and core equity strategist at Invesco, to discuss Nasdaq-100 weekly performance. We'll also take a look at retail sales numbers as well. Ryan, it's great to see you as always. Welcome back to Trade Talks.
Thanks, Jill. Great to be here.
All right, and let's take a look at your first chart here with weekly performance. It has been quite the earnings season for the past few weeks and some of the movement that we've seen in the index.
Yeah, it has been. And you know, you look at this week, you have QQQM up 58 basis points versus QQQ up 57 basis points. That 1 basis point difference in performance is likely due to the ability of QQQM to reinvest dividends at the fund level. It's one of the advantages as we look at the two different distinct products. But beyond that, both outperformed the S&P up 38 basis points and S&P 500 value down 25 basis points. And you know, it's interesting. You look on a month-to-date basis, you have QQQ and QQQM outperforming S&P and S&P 500 value. That's even with the Fed's announcement of $15 billion in tapering per month in asset purchases. And if you look year to date, QQQ has kind of taken the torch back from S&P 500, and it had built up a good lead over S&P 500 value, which was a remarkably different story than in the first half of the year, right? Where we had value outperforming for a time. We had the S&P 500 outperforming QQQ for the first half of the year, but we've sort of seen this kind of resurgence in growth and investors' preference to gravitate towards some of these innovative leaders as we look at the back half of 2021.
Right, and let's take a look at your next chart here where we're looking at the consumer. I mean, retail really has been the story in this market.
Yeah, it was a pretty good retail sales report, up 1.7%, better than the median analyst forecast for about 1.4%. Some interesting dynamics there, led mainly by online shopping and electronics. Online shopping saw like a 4% boost in October, where food and service sales were flat. So kind of the read through there could potentially be, you know, we saw kind of this resurgence of COVID cases. There's still some apprehension in terms of maybe going out, and some of the restrictions are still lingering. May have driven people to kind of spend their dollars from an online shopping perspective. You know, separately, you look at the holiday season and some of the worry about supply chain disruptions and product shortages. That may have led people to kind of start their holiday shopping earlier this year. You look at some of the commentary out of companies like Target. They just reported earnings yesterday talking about some supply chain issues. Even, you know, companies like Amazon and Apple issuing, you know, kind of a cautionary tone for Q4 and the holiday season, again, on the back of these supply chain disruptions. So, you know, I think it's going to be a very interesting metric to keep an eye on. We have sort of the unofficial start of holiday shopping season next week, but, you know, it seems as though many consumers maybe got a jump or a head start this year on their holiday shop.
Yeah,
so
and
it'll be something to keep an eye on.
Also, the online retailers or retailers across the board have been incredibly promotional. I know it has spurred me to certainly, not that I need an excuse to do more shopping, but to take advantage of those deals. But Ryan, I also believe Hanukkah starts the Saturday after Thanksgiving, which is earlier than it has been in the past. So I'm sure that's going to impact comps as well. But to wrap up here, let's look at your last chart here. We can break it down into sector performance within the Qs.
Yeah, so, you know, sector really led by communication services and more kind of where QQQ wasn't, meaning no exposure to Disney. A rough week for Disney, down over 9%. You know, on the back of earnings, you saw an EPS miss, you saw a revenue miss. More concerning, I think, from the eyes of analysts was the miss in subscribers for Disney Plus. That's been a very big focus point for the company and the stock. Given sort of the slowdown that we've seen in the parks and entertainment side with everything that's gone on over the past 18 months. So, you know, I think most are still, you know, kind of positive on the world of streaming, but, you know, Disney missed estimates. So you actually see QQQ reap the benefits there on a relative basis. Also, no exposure to energy, no exposure to real estate. Those were the two worst performing sectors in the S&P 500. And QQQ did get a boost from information technology. Just one notable event would be NVIDIA reporting earnings tonight after the close.
That's going to be a hot one for sure. Everyone's going to be watching that. Ryan, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.